Hey, ladies and gentlemen, A. Duttonator MediaT.V. This is Al Dutton, and I'm going to show you how to basically play a finance game with yourself. So here you can see January gross. I have a complete savings of $519.08 as of 1/13, so as of yesterday. And under here you see that there's an overall total calculated big sale of $2,810.55. So you can see right here there's a $600 stimulus, and what I did is 10% of 600 is basically 60, and so like $60 was added to the savings because it was less than that, so that went onto there. So that's the whole name of the game with that. But you can see that over here, this one for the 180, I had already been calculating up the sales or the expenses of each sale of purchase that I made. And so I only netted $10.37 out of 180. And I'm not quite sure where those other expenses came from. I believe they were calculated in December. So out of this one, I was only able to basically keep $1, like 37 cents or something. So you can see that, once again, more expenses. So the idea is that you calculate your expenses off of your overall gross, and you take 10% off your net. So I like to always maybe pay a bill of some type. As you can see, like right here, there's Straight Talk Wireless. I'm not sure where I pulled that out of. I might have actually forwarded it up to the big calculated expense, and I'll talk about that in a second. But right here, you can see like out of this 120, I netted $82.19. So basically $8.21 went towards the overall savings. But I like to always pull out some type of expense of gas, phone bill, depending on the size of the sale, because you can't have expense that's more than what you've earned. You can't scrape 10% off of that at all. So coming back up here to this $2,000 sale is that I wanted to continue my savings instead of saying, okay, I need to have three, like $700 sales. No, that wouldn't be enough. Three $900 sales. Let's just say $3,000 sales. I would have to combine $3,000 sales just to be able to complete this. Or if it were smaller, like let's say it was like a $500 expense, I would have to do like $250 onto my sales, and then I'm in the green where I can start doing 10%. So I wanted to continue scraping off of sales. So what I did was defaulted all expense to this one massive sale, or this one massive expense that it's one debt just building up. And I'm all about solutions. So my solution is I need either two like $2,500 sales for a total of $5,000, a $3,000 sale at least, or $2,900 at least, and that would take care of that, and then I could scrape 10% off that sale. So it kind of motivates the mindset to say, what can I do to get this $3,000 sale? Should I do a paver and turf job? Should I flip a home? Should I close a sale? Which when it comes to sales, I have a note right here. Let me just pull this out real quick. Did a little diagram in my notebook that when you have a sale, you can either break it down from 12 months or 6 months. So what you would want to do, let's say it's about $12,000. You'd want to divide that by 6. And then 6 times, 2,000 would basically be $2,000 a month for 6 months to equal 12,000. Or if you're doing it for the whole year, which stretches your time out a lot longer, and you get less money, it's $1,000 per month. Well, it's the same amount of money, but it stretches your time out when you could be doubling down and doing the 6 months for 2,000. That's 12K, and then you could do that again, potential 24K within that annual time frame. So like the formula for that in trying to find your big sale is, what you want to do is, for example, the 12K, divide it by the 6 months, which gives us the number $2,000 a month is what you would earn. Then you want to multiply that by 2 as well, and that gives you 4,000. And then I put divide that by 6, but that doesn't really make sense. I think that's multiply it by 6. So basically you want to earn 4,000 per month. So that would be 24,000 annually. So you're getting that within the 6 month time frame is what that is. So if you double down on that, that's potential 48,000 within the annual year once you break down the formula. So once again, your 12,000 sale that most people would say, just give me 1,000 a month, prepaid, pay that up front. You're hooked for the year. You're only getting 1,000, but with the formula, because we want to break it down, you could even probably break it down within 3 months, quarterly time frames, or 4 months even, doing it like a third of the year. Obviously, you'd make more quarterly when you can multiply more time frameage times when you're compounding and you're adding the additional multiplication factor into it. So reviewing it over one more time, you break down that 12K, instead of 1,000 a month, you're doing 6 months times 2,000 is what it would take to earn that. And then you're multiplying that by 2, getting the 4,000, then multiplying the 6 months by the 4,000, getting 24,000 total. And that can be done with any number. So you're basically just improving your chances. Instead of getting a total of 12 grand and stretching your time out, you have a potential of getting $48,000. So you're increasing 36K, and you could do that with any number. And when it comes down to the sale, you're just saying, we're going to take care of it for the next 6 months. We're going to take care of it for the next year. Prepaid package sold. Then you just got to make sure you're on top of your game, and you're good to go. Figure out a way to automate the system. So yeah, something like that, 40, let's say I got the 12K sale up front, and that would take care of this. So let's just say this was 3,000. 12K minus the 3,000 would leave me with 9,000. So what I would do from there is probably pay a bill of some type. Like I owe $400 to the electric company, so let's get that paid off. That would drop the 9,000 to 8,600. Scrape 10%. At that point, 860 would go into this 519 seed right there. And this seed, folks, this savings seed, let me tell you, you don't spend this money at all. Not for emergency. If you have an emergency, you find a way to get it somewhere else. Borrow it from a friend, family member, loan from the bank, title loan, whatever you have to do. More sales, whatever you have to do. Do not grab from this. If you do happen to grab from this, make sure it's for an investment move, for a power move that is going to bring you back money. So let's say I pull out 500 out of this. I know guarantee is going to bring me $2,000. I get the $2,000. That's $1,500 I profit. Pay a quick bill of, let's say, $100 towards maybe like, I don't know, just a debt of, let's say, like CenturyLink modem or something that wasn't paid. And that's 1,400, scrape off 140. That can now be a second seed of savings. Because what I could do at that point is I put back the 500 that I grew from there, and then what I would do is I would say savings 2, which would only be conducted when something is borrowed from either this one, and so that would be the 140 that would start savings 2, and then so if I would kind of just leave that alone and then continue to grow this one. But if I were to ever say I need to make a quick power move, like let me borrow from savings 2, and then you'd make a move with that, put the money back, and you could even branch off into a savings 3 and keep it going and going and going. So that's my explanation on this whole finance, keeping track of all your expenses and your inbound income. It kind of motivates you when you know you have to hit a $2,800 sale. What am I going to do to get that? You want your savings to grow, so 10% all the time off of every net profit. So that says, let me get out and make some more sales. And it could be something as small as a $50 table, and so that's $5 off that. Maybe put 5 in your gas tank, $45. You're scraping $450 and putting that into your savings. That's motivation. And another reverse way to look at it, I'm just going to add this as a bonus, is that there's people that I know they're in bad positions. They don't know how to pay their phone bill of $60 or their rent of $500, whatever it may be. So to kind of go backwards on the system is when you have that $60 phone bill, you multiply by 10. So basically, what can I do to get a $600 sale in order to pay the $60 phone bill? So you get out there, do an estimate for a quick yard cleanup, painting job, and you earn your $600, and then take out the $60 for the phone bill. That's your expense paid. That leaves you $540. 10% off that, $54 basically. And so that's the reverse way of doing it. And just looking into that in further detail, let's say your bill is the $500. That motivates what can I do to get a $5,000 sale? Get out there, paver turf job, find a way to do a lift kit on a truck, or flip a home. Say the contract's for like $140K and you find a buyer for $145. Boom, $5K in your pocket. That's what you did in order to motivate that $500 rent paid, $4,500 left, $450 is 10% into the savings growth. And you could even make a power move from there. Take 400 of that and go invest in a plate compactor rental while doing a combination and action of turf paver job with a client who's willing to pay you $7,000, and you could even start a second savings branch out of that one. So you have to be motivated and play the game. And that's my advice as far as the go get sales, save money, don't touch your money unless it's a power move. And with that, folks, I'm going to go ahead and end this. If you have any questions, feel free to click the link in the description to fill out your information. And I'll go ahead and send you some valuable information that'll help you on your next step to the journey to success. Have a great day.